Today's podcast was a little bit different. Instead of talking about virtual machines, data propagation, and execution environments, debating layer 2s or layer 1s, I actually sat down and learned about a different side of the crypto business, the hedge fund business and trading. And I sat down with Sadie Raney. They're a hedge fund based off quantitative modeling and purely off the models that they built for crypto trading. It's a different conversation than you're probably normally used to, but it was a lot of fun and chatting with someone that has a different perspective in the space. I just want to start with a little bit about the fund. You started in the bear market and just what it's kind of been like, just being involved kind of on the institutional side through the ups and downs, going through the bull market in 2021, kind of all the stuff that's been happening afterwards in the bear markets, always something crazy going on with either FTX or you name it. But kind of just from your fund's life cycle, and then a little bit also about your thesis and just kind of how you're thinking about the market.
Yeah. So thanks again for having me on here. This is, I'm looking forward to our conversation. I've listened to some of your episodes this week and some good content. So I'm excited about the conversation. Yes, we started in 2018 in the bull market, and that, at the time we kind of kicked ourselves and we're regretting our timing of entering the market. But, now it's actually been kind of an asset for us because we slogged it out for a couple years, and, it was all about surviving and building and, focusing on our tech and waiting for the markets to come back. And so then when the bull run hit in 2021, we didn't take it for granted. And, we just kept building and kept being conservative in everything we did. And so, because we knew it was, it wasn't going to last, and we're going to see lots of these cycles. And I think that's why we're still here today and why we're still doing well, is because we knew that the bear market was coming again. And it's kind of how we cut our teeth. And, that kind of goes into our thesis too. We don't make fundamental bets on any of these assets. Like, we leave that to the VCs. Like, if you want to make a fundamental bet on a protocol, great, but that's a VC's job, or somebody that's going to do like a buy and hold. Like, you're going to buy this and you're going to hold on to it for 5 to 10 years and try not to like watch it, because it's like being on a roller coaster. And, what we do is we really, we believe that an active management thesis is the best way to manage the volatility of these assets, and the best way, honestly, to stomach these markets. So, everything's data driven. We've built our own platform that we develop our algorithms. We use a lot of proprietary methods in regards to our data to really identify trends in these markets, because even the most fundamentally sound asset in this market during any kind of major event is going to drop. And so we believe that actively managing in and out of all of your positions is the best way to capture the most return in these markets. And so we've just built our thesis around active management, and we're a really technical team. So it's very, very data driven. We don't have anyone who's making, judgment calls on when to go in and when to go out. We really listen to the data and listen to our algos, and that's how we trade.
That's amazing. I guess like maybe backing up, like starting in 2018, I remember was not a super fun time, even just being involved in the markets. What gave you, I would say, leading up to or even after kind of that bear market started in 2018, I think we had like a 95+% drawdown on ETH from $1,100, $1,200 to $80. You must have had pretty strong conviction in the crypto and the blockchain markets to be able to say, this is what I want to spend my time doing, and go out, try to raise that money from limited partners and actually start a fund in a bear market. That's not easy.
Yeah, I think for us, it was really it's such an interesting technical problem. And when we got into these markets, they were super immature, and I'd say they still are really immature. And the reason we built the fund was actually my co-founder, Jesse. So Jesse and I met, kind of going back a little bit, Jesse and I met at his prior startup, which was called Blue Box. It was a private cloud company in Seattle. I was his financial controller. We sold that company to IBM in 2015, and then 2016 he ended up rolling more into their blockchain group, and was dabbling in crypto through 2016, 2017. And I can remember being at a barbecue in 2017, and he had 2 laptops, and I was like, "What are you doing?" And he said, I'm mining Ethereum." And I was like, "Okay, like we're all having like burgers and beer, and you're over there mining Ethereum." But so it was kind of an interesting thing to look at. But then towards the end of 2017, he started trading more actively, and the markets were so I guess simple back then too. Like he was like, I can see these patterns in the price, but I can't actually execute fast enough because all the tools are just terrible. So the original idea was, hey, let's build a trading platform that can execute via API, and we can actually execute these trades and capture some of this. And so we started building out the platform and raising for the fund at the same time, and built this fantastic software platform. But then we're a little bit shocked to find out that none of our trading parties could trade by API. So, we built our system out so that you could just plug in, WebSockets and APIs to different counterparties. And all of our counterparties were like, yeah, can we trade in Skype? So that was a little bit of a shock for us, but it ended up being, one of our biggest advantages, because we've always, as soon as anyone, brought API pricing online or trade execution online, we immediately plugged it into our system. And we were able to, really execute fast. We have reporting that's really, really tight as well. So we've just, in a lot of ways, just been a little bit technically ahead, I think, of the market and of our counterparties sometime. But that really is what led us to building this, is that it was more of a technical challenge of, hey, this is an area where there's really bad tech, which is ironic because it's a digital asset. But we can build some really good tech, and we can get an advantage, and we did.
Yeah, I definitely want to dive a little bit deeper into some of the things that you've seen the industry grow through. And just being early in 2018, there wasn't a lot of institutional kind of support back then. But I think before we're diving deeper into that, I would love to just talk a little bit about like how you kind of raise the fund, if you can. Just being on the other side myself, on raising a fund, or in the process of kind of going through those motions now. It's not an easy process. Can you talk about, especially in the bear market, where there's not a lot of FOMO, the coins have gone down quite substantially, people, it's kind of fever pitch is worn off. Can you talk about kind of that slog of just building the company and the firm in that bear market, and how it was kind of during that time to go out and try to raise capital?
So when we first started trying to raise for the fund, the funniest part was that we found that it was always one of two things. They were interested in the fund, or they were interested in our tech platform. So we did a round for the tech platform, and that closed in like 6 weeks. And I think it would have closed in 4, but one of the LPs was like in Tahiti or something. He's like, I can't sign the documents for 2 more weeks. But it closed super fast. And then when we launched our first month of trading for the fund, I mean, we had $520,000, I think. And it was just a slog. I mean, you had so many conversations where you were just educating investors over and over and over again. And so when we started building, it was, friends and family, people that we knew in our networks. Jesse had a great network from his exit at IBM. So there was a lot of people who knew that he'd already been a successful entrepreneur and were excited and interested in what we were doing. But it was a lot of little checks. It was a lot of, meeting after meeting after meeting of really just explaining what it is we do and what crypto is, and, the difference between Bitcoin and blockchain and Ethereum. And, I'd say for every 30 conversations, we had an investor commit. And, you know, and a lot of people were just wanted to kind of dip their toe in. And, you know, we buckled down and we knew we had to build a track record and, you know, just continue to trade and build our systems and build track record. And, you know, I wouldn't say it's easy. We still probably are constantly educating and talking to people. I mean, I'm from a very small town in northern Washington state. And, you know, when I go back home to visit, I'm many times people say, so what do you do? And I'll tell them and it's just blank stare. They're like, I don't have any idea what you just said. You just spoke another language to me. What is Bitcoin? So, you know, we're still really far away from people, even mainstream, really understanding it. And so it's still just a lot about education and conversations over and over again.
Yeah, 100%. And I hear similar stories often, whether it be crypto or just starting a company. I kind of feel like starting a firm in some sense, I think relates very similarly to starting a company. You're going through the same motions. You got to create the LLCs and go out, fundraise, all that kind of stuff that typical founders have to do as well. And I think more often not, what I find when I talk with people is just that persistence and starting small and kind of continuing to grow and just not give up. And especially at a time like 2018, where markets kind of puked and the appetite was just not there. It's super impressive that you and the team were able to kind of continue through and stick with it. It's definitely a challenge. Can you speak a little bit more, though? You said within 6 weeks, you ultimately raised the software side for the fund, or to raise the money for what you had built with the software. Can you talk a little bit more about that? Why people were so excited at that point in time with what you built?
So the reason I think people were so excited was because there just weren't good tools in the market, and trading from a technical perspective was really, really difficult. We were meeting funds that had, Google spreadsheets, and, they were tracking their trades in Google spreadsheets, and they were manually manually negotiating the prices and, manually settling. And, we had to do a fair amount of that as well, but we built our system so that our system could do that. And, we were trading with our system on day one, and there just wasn't other tools in the market that could do that. And, over the next couple years, we got approached by, prime brokers and different people, trade execution, best price. And, we already had all that built into our system. So, I think we're a team that doesn't like to sleep too. So, we decided to launch the company in December of 2017. And we actually had the software up and running for our first trades in April. And, that's just the timeline that we worked on. So people saw how quickly we were building and got excited about it.
Amazing. How do you feel like just starting in the 2017, 2018 timeframe, obviously now the market is starting to get more sophisticated and just people's awareness about it, being able to communicate it. There's still, I would say, lots of technical challenge and even regulatory challenges that the industry faced. But how has the progression since you've joined the market been with other firms, and even on the software side? How has that developed over time?
It's been developing in fits and starts, and there's definitely fads where, 1 year it was custody, everybody was building custody, and the next year it was best execution, and everybody was building best execution software, and every boom and bust cycle, a lot of those projects just go bust. And so sadly, we're seeing some technology that's really, really good, but it just gets abandoned. And, what's still there is still pretty rudimentary. And, you can't pull prices, you can't high frequency trade in crypto. Like you can't execute that fast. You can't pull prices that fast. Like everything's just on a slower scale, and we're getting there. The FTX situation was really disappointing because their exchange worked really well. From a technical perspective, it was a great exchange, and their execution was great. Their reporting was really solid, was reliable. Unfortunately, the people don't appear to be that were behind it. But, every time they talk about reviving that exchange, obviously from a technical perspective, we're excited about that concept because it's really good tech. Whereas other exchanges, sometimes, I won't name them, but, there's another exchange that if you go in and you want to pull reporting, you have to manually go in and pull reporting. And, every time you change a setting or a filter on the report, it refreshes, 30 seconds later. And it's that's insane that, this is a highly technical industry and we still have so many tools that don't work. I think the custody piece is really interesting. And obviously with everything going on right now, there's a lot of focus on that. We've seen that really advance over the years. The data piece too. The data was super fragmented. One of the first things we built in our platform was a data ingestion engine, and it ingests data constantly and it normalizes that data. And it's just simple things like, one pair is priced in BTC, it's a BTC USD, and the other one's priced in USD. And so you've got to normalize the price, and then timestamps are all over the place. It's just like there's no consistency on any of the pricing data. So, we had to actually build a system that cleaned that data and stored that data. And I think when we first started, there was tons and tons of services that were offering to give you that data. Now you can pretty much pull it yourself if you know how to. So some of the pieces of the industry have really improved. Unfortunately this year we've seen a lot of really interesting companies just start to shut down or delay offerings. So that's been sad to see.
So maybe just to clarify, it's not particularly the blockchain infrastructure that's the limiting piece. It's the supporting pieces around it, the infrastructure that allows you to trade, the quality of data, the reporting of the data that is really still not at par where it should be.
Yeah, totally. We launched, we spun a company out in 2020 or 2021, excuse me, called Makara, which was an SEC registered robo-advisor for crypto. And we sold that actually last year to Betterment. It's now the Betterment for Crypto product. And when we were building that, we needed to build on top of an exchange and a custodian. And when we went out to the market to see who could meet the technical requirements that we needed to, just for like separately managed accounts, for example, we talked to everybody we could find, and, there were 3 people that could do it. And then you start talking through like what each of those, which tokens each of those can support. And then the list got smaller. And then, then you go into just like, some of the reporting pieces of it. And, there was just one. And so we built on top of that one. So there's just not very robust offerings yet in the market.
Do you think that is ultimately a result from entrepreneurs not recognizing the opportunity, or do you feel like it's people are scared of the regulatory aspects and not willing to try to create something? What do you think is the core bottleneck that has kind of prevented the industry from adopting best practices after definitely now it's a mainstream kind of center view? Why doesn't it exist?
I think it's an attention issue, and there's just so much to do. There's this industry. One of the reasons I love this industry is because it's fascinating, and every time I turn around, there's something totally new. And when we started, there was DeFi wasn't a thing. There was staking wasn't even a thing. NFTs nobody talked about. And I think they were there, but they were just sort of like a little hobby that some people had. And now it's like every time you turn around, the industry is building and developing or creating something new. And so when you're an entrepreneur in this space and you're building a company, it's like, what do you focus on? And you can build and towards, your idea. And I think we're just all in a race to get our products built. And, some of the stuff, the actual nuts and bolts and operational pieces, just, you don't really think about until suddenly you're trying to launch and then your customers are asking for it. And so I think it's a lack of attention because we're so focused on building and we're so focused on keeping up with what's new. And, a lot of companies, you see them start to backfill some of those pieces later, but they're not the exciting pieces. Like nobody gets into crypto because they want to build reporting modules within their platform. Like, it's boring stuff. So
that's true. Hopefully now that the bear market is kind of here, things move a little bit slower. We can talk about what went right, what went wrong in the last bull market. Hopefully the infrastructure reporting, even custody solutions continue to get bolstered. We have a little bit more clarity from our government so that these things can exist. Because I think, like you, I think the industry is probably the most fascinating thing that's going on in tech. There's some other fields, but what I appreciate specifically about crypto is the democratization of access, and anybody can build. It doesn't really cost a lot of money. Entrepreneurs can come in and have a laptop and an internet connection and start to publish these things. And I think the industry will flourish because of that. So hopefully more exciting things to come, and as we get more people focused on the space and building in bear markets.
Yeah, I completely agree. I mean, who knows what they're going to come up with, what we're going to come up with next. I mean, what we're going to work on. I mean, what my kids are going to be doing in blockchain and crypto in like 20 years is going to be mind blowing and stuff that we can't even imagine right now.
100%. How do you feel like, so ultimately you set up the fund in 2018, kind of started the operational, got the software all set in stone. Going into kind of the bull market of 2021, how, I guess, kind of going into it and coming out of it, even throughout the bear market, how did you kind of think about like that process? Did you think about it going to be similar to the 2017 kind of ramp up and kind of ultimately drawback? Or did you just kind of focus on data and what your systems were really highlighting?
We really focused on the data, which is hard, right? I mean, in the bull market, you get super excited and you don't want it to end, but you kind of know it's gonna. And so that's one of those situations where we really had to trust our system and, really just believe in what we'd built and stick with it. And we did. And, but there were definitely days, in our trading strategy, we're going to catch, most of the run up and, we're going to catch a little bit of the drawdown and, but if we're doing our job well, then, we're going to catch the middle. And, but when you exit the market because the algos are telling you that things are getting soft and the price is still going up and, you're looking at those charts and you're just, oh God, it's so hard, right? But you have to trust your systems and you have to exit when they tell you to. And I mean, the minute you start ignoring your algos become worthless. So if you're an algo trader, you trade with the algos. And that, that's really, really hard. And, some of our team members, they trade a little bit on the side too. And, some of them did well and some of them didn't. And, they're, cause they were like, oh, I totally had faith that this was going to keep going, but then it didn't. And, they're trading different stuff than what the fund trades, but, they get really caught up in it. So it's a good thing that we have the algos, I think, to rein us in. And, kind of same goes true for investors. When Bitcoin's at 60K, people are just like knocking down the door because they want to invest. Everybody's downloading the app. Everyone's like, opening a wallet and texting you to see what they should buy. And then it drops down to 25 and nobody wants to touch it. And they're all like ready to abandon it. And you're like, wait a second, aren't you the one that wanted to buy it at 60K and now you want to sell it at 25? Like you gotta take the emotions out of it.
Truly. Yeah. I've heard, once Coinbase becomes the number one application in the App Store, it's probably getting very close to the top. And I think it's been a reliable indicator for the last few cycles. But it is funny, the same people that want to buy the top are the first ones to leave once things take a slightly turn for the worse. But speaking to like the algorithms, I know you can't go into the specifics or ultimately all the variables that work, but is there any particular metrics, either one or two, that you could maybe speak to that you particularly keep a close eye on that you could talk about?
Honestly, the thing that we look at the most is, volatility and, volume. And with this, doing any kind of sizable trading or turning over a fund a lot in a month, you really have to go where the liquidity is. And, so we've got a lot of our indicators focused on, volume and liquidity, and then obviously price, where most of our strategies are momentum based. And so we're just always looking for that shift in the market and that early signal that things are turning. And, we trade across the top 20. So, not all of the top 20, obviously, but, across the top 20. And, we've got anywhere from 6 to 10 algorithms across those at all times. And so, we have to have a lot of liquidity wherever we're trading. And then, we have to be able to have actionable signals.
Yeah, no, it is interesting. It's surprising, I guess. The top 20 is not always changing, but every bull market and bear market, I'm surprised what made it to the top and what did not. But as you pointed out, the volumes are extremely important. And it's funny, even some of the meme tokens being able to get into the top 20 and how much liquidity they actually have. It's quite impressive, actually. But maybe reflecting on kind of the 2021 bear market, obviously there is lots of learning lessons, as with any bull market. Were there any in particular that you can think of that were maybe different from 2017?
So we, 2017, you really traded the top three. And, you traded the top three, and really everything moved with Bitcoin. So, in some ways our algos were a little strapped for data when we first started to try to find more of an edge. And, in 2021, when you saw so many coins, sort of flying into the top 20 and back out, that was actually one of the things that we learned is, we really tweaked kind of our algos that pick what's in the top 20. So it's not what's in the top 20 this week. It's, based on like trailing averages and things like that. And so we had to get a lot smarter because you had a lot of coins that would sort of pop in that you'd go, ooh, like, no, we're not trading that. But then also we really, it allowed us to expand our strategies pretty aggressively too, because there was suddenly a lot more depth in the market and you started seeing stuff diverge. And so, trying to pick up some of those diverging trends was something that we started looking at too, because, stuff sometimes now doesn't move just with Bitcoin. And so you have to try to identify what is moving the market and what's following it and what's not.
Yeah, no, it is fascinating. I think the hedge fund world and kind of the liquidity, figuring out what to trade, what to not, it's a deep rabbit hole. And I think maybe not one that more broadly, I would say, retail has kind of more broadly retail, I would say, is kind of learning about more investment, more of the flows. Even I think Robinhood kind of highlighted how some of these things have worked. But I think outside of just the mechanics of it, one thing that the entire industry has been paying a lot more focus on has been macro and the Federal Reserve and interest rates. And I think tech investors for the first time are now macro enthusiasts and excited about macro. Can you talk about a little bit just what your thoughts are on macro? Obviously, interest rates have been rising. How do you think this affects crypto or even kind of funds more broadly?
It's really interesting. There's so many different narratives and there's so much news, especially about, interest rates and inflation and central bank and, what governments are doing to manage everything. And, we watch all those narratives and we read all the news and we look at things. But from our perspective, it's not typically that much of an impact in general on the more sophisticated investors and, institutional investors in crypto, because it's not, we don't have investors who are investing a large chunk of their portfolio. They're high net worth or ultra high net worth individuals or family offices. And, they've got their small allocation to, very high risk assets. And that's where crypto falls. So, it's a different bucket. So, somebody who's investing, 1% of their portfolio into crypto isn't, it's not that 1%. It's not like, oh, I'm going to put that in treasuries or crypto. That's coming out of a different bucket. And, we tend to see that people, in our investor base, they're less concerned about some of the, the inflationary questions and interest rates. And, they're just happy to let their crypto allocation sit there and not think about it for a while. I'm sure they're, reallocating their portfolio in other ways, but we haven't really seen a huge impact on specific crypto investors. I think it has much more impact on retail investors because unfortunately there's just so much information. If you're a retail investor, it means you typically have a day job where you actually do something else and you're trading on your lunch break or at night or on your phone and you're reading these articles and one article is telling you this is great for the price and the next article is telling you it's terrible and one article is telling you to buy, one article is telling you to sell, and for a retail investor trying to figure out how to do that on your own, it's really, really hard. So I think they're much more reactionary and trying to figure out how to manage their holdings. But, for our investor base, they tend to, they have their high risk allocation and they're content to kind of leave it there and let it ride and see what happens.
I've heard by quite a few people that just allocate 1 to 2% of your net worth into crypto or some other higher risk asset and then just don't forget about it. But I think what we've seen, or at least now that technology more broadly has kind of been mature, it's a much larger kind of, I would say, percentage of people's portfolio than it once was. What do you think it will take for people to maybe put 5 or 10% of their net worth into crypto assets? Do you think it'll take usable products, regulatory clarity? How do we get more adoption or people, especially outside, high net worth individuals, but even retail as well, more educated about this asset class as a whole to feel comfortable allocating to it?
I think it's really just going to be making it easier for people. It's still really hard to use, and I forget about that. You probably do because you're in it all the time. So, trying to, explain the nuances between, DeFi and NFTs, it's just sort of, we're used to it. And, for the everyday person who has, job, life, family, other things, they don't have time to educate themselves on, what a crypto wallet is, what a private key is. And it's just super overwhelming and super confusing. And, it's not as simple as just downloading an app and using it. And I guess it is in some ways, but if somebody's curious about NFTs, but they also want to buy a few different tokens, it's really hard for that average person to just go and figure out how to do that. And until it's seamless and, until it's something like PayPal or Venmo, where people are able to just without thinking, download the app and it's connected to everything that they want to connect it to, and it, intuitively makes sense. I think we're not going to see a ton of adoption for people to put a larger part of their portfolio into it because they just don't trust it because they don't understand it.
Yeah, and I would say I was much more excited about this past cycle than 2017 because 2017 you could write a white paper and just launch a token, have no product, and the token go up 100x. We've come quite a bit from that point in time. At least now we have usable products. We have Uniswap, OpenSea. We have different NFT trading platforms, Magic Eden, Tensor. It's remarkable how far we've actually come. And I think I appreciate today that we have usable products. But as you mentioned, the user experience and the user design still needs to be improved vastly to actually go from low millions, low 10 millions to hundreds of millions and billions. But we're making progress slowly but surely.
Yeah. And then also, like, you know, I guess interoperability is like a big thing too. I guess I probably should have mentioned that, you know, for the NFT example, like if somebody wants to buy an NFT, I had a friend who was trying to buy a couple different things, and they were super frustrated because they needed Solana to buy one, and then they needed ETH to buy the other, and they were super confused and they were super frustrated, and, you know, and they're really new to it, and they're like, I don't understand. I own Bitcoin. how do I buy this NFT? You know, and I'm trying to explain to them, well, you need to, you know, you've got to trade and walk them through it. And, you know, it gets very, very frustrating. And so I think, you know, some of that is coming, and there's some really cool projects that are working on that very problem. But, you know, that's a whole nother security conversation too, about the risks of that. So until we get more cross functionality across chains for the everyday user, I think it's also going to be a little bit of a barrier for people.
We definitely need to make it more frictionless. It is a little bit cumbersome. How do you feel like, I mean, I think outside of just the product experience, I think obviously the US has kind of taken a little bit of a negative stance. I know you're not a lawyer and don't want to ask you specific legal questions, but on a high level, what is just your kind of take on the US's approach to kind of dealing with crypto? Have you seen, I know you're not kind of investing in early stage teams per se, but do you feel like teams will move overseas when you talk with foundations or anybody building the technology? What is kind of your sense that you get from them?
So one of the things that I think is really important for people to realize, you know, is it's a slow process for any kind of government or regulatory decisions. You know, the Ripple case started, I don't know, was it 2.5, 3 years ago now? And, you know, we're still like looking for clarity on that. And, you know, so there's a lot of stuff happening right now that, you know, is really getting people pretty wound up in one way or another. But, you know, the wheels turn slowly, and, you know, we knew it was coming. And there's obviously people who, you know, are very doomsday. You know, oh, this is, you know, sky's falling, this is the end of the world. But the thing I always point to is if you go to any major financial institution in the United States, they all have blockchain teams. They all have teams that are, you know, I mean, some of them are even, you know, mining, and, you know, they've probably building their own coins behind, you know, closed doors, and they're all just kind of waiting on the wings right now to get a little bit more clarity, because traditional finance is much more conservative, and the ones that have survived, you know, and been around for 100 years have done so because they've been conservative, and that's what they're doing here too. And so once they start feeling more comfortable, once some of these decisions start, you know, being made, I think we're going to start seeing those floodgates open. You know, obviously we didn't want to see regulation by enforcement, but that appears to be the current path that's being taken. And, you know, we'll see how some of that pans out. And it's really too early to tell. But, you know, I do think in the long run, once some of these bigger institutions get more comfortable based on the outcomes of some of the things that are happening right now, then you're actually going to start seeing bigger names that are mainstream names that are going to come into the industry. And that, I mean, that's only going to be a positive, because that's when you're going to start seeing volume. That's when you're going to start seeing much more diversity of offerings. And, you know, some of the bigger institutions starting to compete with each other. I'm kind of excited to see some of those little battles and what they're able to build. You know, there's a lot of distressed crypto companies right now. There's a lot of startups that have built some really cool things, and, you know, the blood's kind of in the water. And so you're seeing, I was talking to a VC recently who said they've seen a higher volume of M&A deals in crypto so far this year than they have in the 5 or 6 years that they've been doing this. You know, the dollar values are much lower, obviously, because they're getting a lot of bargains, but, you know, a lot of these bigger companies are coming in and swooping up some of this really cool technology. And I think that's all going to come flooding in once people are more comfortable. And until we get through some of these pain points, they're not going to come in.
Yeah. No, it is frustrating. And I think even now, personally, some of the conversations with limited partners, being able to explain some of the nuance and clarity, it is difficult. And I think everybody would appreciate, especially I know the entrepreneurs that I speak with as well, would love that clarity. So they don't have to necessarily move or relocate their company outside of the US. I think I appreciate crypto and the fact that it is global. And I think regardless of whether the US is kind of forward thinking or not, the industry will obviously still exist and move forward, even if the US shoots itself in the foot. But no, I definitely think everybody would appreciate more clarity.
Yeah.
In terms of market makers, I think I've read articles recently, and I think you would know quite more about this than I, just on the trading side. Do you feel like, obviously, in bear markets, volumes come down? Maybe we get some crazy volatility if we don't have as much volume. But can you speak to what you've seen on like the market maker side, particularly say in the bear market, but also some of them just saying, look, we're not going to market make because there's not as much clarity in the US?
Yeah, the big thing that we're seeing with the market making, especially with some of the bigger players stepping out of the industry, is we have a pretty strong opinion about market making in crypto, and and that it to date, many of the market makers that are out there have done more damage than good, and that's because they're focused on revenue, and they have to be. Every company's focused on revenue, right? But market makers, they have to follow the revenue, and so they're following the volume and they're following the liquidity in these markets. And these markets are so fractured that actually ends up being a negative for some of these tokens that are really they're just trying to build up their user base on multiple different exchanges. And when they've got a market maker that's focusing on the most profitable, and the liquidity is drying up on the others, then you lose users. And it's like the chicken and the egg problem. You need users to get liquidity, but in order to get liquidity, you need users. And, if you've got a market maker that's kind of jumping around and, retail investors or traders that are trying to follow that, it really kind of damages some of the projects. And, some of these other projects that have, layer ones and layer twos, you've got also the problem of like cross chain liquidity there, where if you're an L1, you want L2s building on top of you. But if they don't have volume, if they can't get volume and they can't get liquidity building on top of your L1, then, they're going to go somewhere else. And so, we've been looking into ways that, we could structure some projects where you could actually focus on some of that liquidity for those, subchains and L2s, and like help them build. Because it's, some of these guys are live or die based on the price of their token, and that's how they're funding their operations. And if they're working with market makers because they want to build that liquidity, but at the same time, sometimes it's actually damaging the price of their project. So we don't feel right now that a lot of the market makers in the industry are helping. There are some good ones out there, but in general, it's a negative, I think, for most of them.
What do you feel like would be the catalyst for more healthy market making within crypto? Is it just more competition, kind of more people entering the space? Again, going back to that regulatory clarity, just getting people the clarity that they need to make markets. What do you feel like it will bring better health to the industry?
So I think you're going to have more competition. You're going to have more functionality across market making. Some of them just don't have the tools that are needed to manage multiple venues at any time. So, it's almost like flipping a switch. They're market making on this exchange, and then they actually don't even have the technical capabilities to like move and switch somewhere else because they're a small shop and their tech isn't equipped for that. So they're literally like market making on one and then they switch and market make on others. You need somebody who has the technical capabilities to market make across multiple exchanges at the same time. And you have to make sure that they're not arbing the price against you. And if they're an independent market maker, that's their business. So, finding, projects where they can work with L1s to help, promote their ecosystem would be one way that market making could really help the industry.
Yeah. No, it is fascinating. I normally kind of deep dive the technical nuance of the different L1s, L2s, how virtual machines work, consensus, how they propagate data. But I think this is kind of a refreshing and different conversation, seeing kind of more the back office of how these tokens get traded, the market making. There's a lot more nuance than I think people will truly appreciate.
Yeah, it's a highly technical problem, especially in this industry. If you're trying to market make more than like your basic top 5, if you want to do anything interesting and complicated, it's a super technical problem, especially if you want to market make in on chain and DeFi. That's a whole new beast.
Speaking on the topic of DeFi, do you feel like blockchain rails can ultimately accommodate some of this stuff? I know it's very early, but do you ever envision a future where more things can actually be done on chain than they are kind of off chain as they are today?
Absolutely. There's multiple projects that we know that are focused on that problem specifically. And it's kind of mind blowing to see what some of these people are building. And, I just actually went to the Avalanche Summit last month in Barcelona, and seeing some of the stuff that people were building, it's just kind of mind blowing. So I absolutely think that blockchain's going to be a solution for that among, 1,000 or 1,000 other things.
Yeah, no, I'm definitely excited for things to move on chain as well. I think we're hopefully now kind of getting out of the infrastructure phase, applications actually being built. Now we just need to streamline those applications, make them a little bit more usable and friendly. But I'm optimistic that we can do more things on chain. I think the door is just now opening, and I'm excited again for our entrepreneurs building in the bear market to take advantage of that. But speaking, more broadly to crypto, I think crypto just being a smaller industry, having a token involved, being a newer technology stack, there's lots of narratives. People will say my chain is better. No, my chain is more decentralized. My chain has 10,000 supply, whatever it may be. How do you personally kind of cut through the noise, figure out what to read, what not to read? How do you kind of consume content within the crypto sphere?
I read a ton, listen to podcasts, and, it's kind of hard because there's just a lot of really quirky, interesting projects that are just completely on the fringe that, I'm reading all the daily stuff, all the kind of major news stories, which unfortunately every newsletter has the same 5 stories every day. But then, just following people on Twitter or, actually the biggest source of interesting fringe news is from my team. We've got some brilliant, interesting people on our team, and they're, we're always dropping interesting articles in Slack, but I find myself kind of digging into some of these fringe use cases a lot more, and, more out of a curiosity of, okay, what's this thing going to do and how's it going to build? And, everything from carbon credits, and not even buying and selling carbon credits, but, manipulation of offsets and things like that. And how is that going to factor into this, to NFTs for healthcare services and bundling healthcare on the blockchain and, using a token to incentivize people, so I could read all day, every day. I'm sure you feel like that too. It's just you can't absorb enough, and then I don't know if I'm cynical from being in this industry for 6 years, but there's a lot of stuff that gets hyped, and I'll kind of read an article or two about it, but, a lot of times it's hyped one week and it's gone the next. And so I typically, any kind of new super, interesting thing that people are all talking about, I tend to wait until it's been around for a few weeks before I spend a lot of time reading about it. And I don't know if that's because I'm cynical or what, or if I'm just like trying to be good about my time usage. But, a lot of stuff comes and goes and people talk about it for a week and then it's gone.
Yeah, I definitely echo that sentiment, and definitely being on Twitter, you see that more often than not. Uh, People will hype things up, and as you mentioned, they're gone the next week. And so I think the blockchain industry as a whole has a kind of very quick mind, and then we'll move on to different things. Are there any particular podcasts or news sources that you enjoy more so than others that you feel like are consistently producing high quality things? Like if I were someone that didn't know anything about the industry, was trying to learn, would there be any particular kind of places that you would point me to start?
So the book I always tell people to read when they first get into crypto is How Money Got Free, because that's a really fun book, and I think it puts a lot of things in more simple terms, and so that's the first thing I always recommend people read. And and then I think so. The thing that I really enjoy reading right now, I try to read it every day or every time it comes out, is the Bloomberg Crypto, and because I feel like it's kind of like an outsider's perspective on the industry. We're on Twitter and we're on Slack and we're kind of in our own little universe reading articles in Telegram and whatnot. And so we're just kind of inundated with a little bit of our own thoughts a lot of times. And, Bloomberg seems to be a little bit more aloof, and it seems to be a little bit more of what like the everyday people see in crypto. And also they haven't drank the Kool-Aid as much. So, they can be a little cynical, and sometimes I'll step back and I'll be like, oh yeah, that is a good point. Maybe I shouldn't just, accept this as a given. So I do like, reading that. And then I don't know. I mean, there's some people that I follow on Twitter, but I find that actually I cycle through who I follow on Twitter pretty regularly because it gets a little bit repetitive. And then,
no,
yeah.
I definitely agree. I think having the outsider perspective is important, especially for you and I spending as much time as we do every day in the industry, deep in kind of the news on Twitter. You often forget that there is another world that exists outside of our crypto bubble. People don't often think the same ways that we do, and it's refreshing to be like, oh, we're still early. We have to appreciate that the industry has not really scaled, but that's why we're here and that's why we're optimistic.
Yeah, absolutely. I couldn't agree more. Sometimes I'm like, so much has happened, and then you have to remind yourself this is still super, super early and it's just beginning.
100%. Are there any particular things that you're either looking forward to for the remaining of 2023 or even going into 2024? I know obviously robust infrastructure, reporting tools, security for custody solutions, but is there anything that you're uniquely excited about or that is not built yet that you were like, please build?
So I know it's kind of buzzwordy and trendy right now, but the AI craze, I'm really curious and excited to see over the next year what use cases come out of this kind of AI frenzy combined with crypto. I was just reading an article today that was like, who will win, AI or crypto? And I was like, why? Like, are they fighting to the death? Like, I think they can coexist, and like, I bet they're going to do some really, really cool things when you combine them. And so I'm just super curious to see what the use cases are. Quantum computing is another thing that I'm, curious about what advancements we're going to see in quantum computing over the next year. I think there's going to be quite a bit, and then also just kind of how this clarity, the holy grail right now of crypto and the clarity of regulations, how is that going to affect things? And I mean, honestly, I just love to see what people are going to build. I mean, what they're going to build in the next year, what people are going to build in the next year is going to shock us and surprise us. And, I can't even guess what's going to be invented or created next.
Yeah, I am truly excited about that as well. I think having that clarity is definitely helpful for the entire industry. But even outside of that, typically it's the bear markets that highlight uh, the builders. The builders that build throughout the bear market are typically the ones that come on, are able to kind of climb the hill, and during the bull markets be the champions of that kind of bull run. And I'm optimistic, as we've kind of talked about, that the infrastructure is now kind of laid. Applications are getting to the point where they are usable. We can start to compose together, make some interesting apps, and also have a pretty user experience so that we can actually kind of go from the small niche industry that we are in terms of users to hopefully hundreds of millions this next bull market. And all we need is one killer app. And then, like you said, I think our parents, our friends, our family will be like, I know that app. I can use it.
Yeah, I think there's going to be a moment, and it's going to happen, and we're all going to be, I think, a little bit jaded at first and trying to figure out, like, is this really the moment? And then, we're gonna look back and go, okay, yeah, this is the moment. This is where this is happening. Like, people now, everyone knows how to use crypto. That's going to be the moment when my mom stops asking me what I do for my job, and it's going to happen, and we're all going to be surprised because we've been waiting for it for so long. But and then it's just going to be no turning back, and it's going to be everywhere, and it's going to be integrated into everything. And 10, 15 years from now, like, our kids are, like, my kids are pretty young. They're still in elementary school and middle school, and so they've grown up knowing what crypto is, and they've grown up with it, and it's just going to be a given. And when they're adults, it's going to be everywhere, and we're going to go back and say, like, oh, we were there. It was, it was March of this year, and this thing happened, and it all took off, and the rest is history. And who knows when that's going to be, but I do think it's going to come, and it's going to surprise us all, because it's probably going to not be something we expect.
I do agree. Well, Sadie, thank you so much for coming on the podcast. I've really enjoyed the conversation. For those that want to find out more about either you or follow you on social media, or learn about the firm, what is the best way to do that?
LinkedIn is probably the best way to find me. We obviously have a company website, but LinkedIn's the best way to find us. We don't post a lot on Twitter. We read a lot on Twitter, but we don't put much content on there. But people can always reach out to me on LinkedIn. Or if I'm speaking at a conference or something, I'm always happy to chat with people.
Amazing. Well, thank you again for coming on the podcast. It was a really fun conversation. I wish you and the firm all the best.
Thanks for having me. I enjoyed it.
Thank you.